happen. So initially it was just theoretical. So, and we were very cautious to make sure that we just take a small amount of investment, invest in a few deals and see how it performs. Alhamdulillah, so that's the reason why initially for the first 5-6 quarters, you'll see that we hardly did any deals. But then we were able to sort of test and understand that yes, this is something which is possible. If you have the right systems and processes in place, and that I cannot overemphasize, the right systems and processes in place, then you can make sure that this model can work and it can generate good returns for the investors, while at the same time helping the promoter to kind of take care of his fund requirement. So alhamdulillah, after gaining that confidence, recently we have been expanding a little aggressively. 11th quarter, in the first 11 quarters, we did about 10 crores of deal. And I should tell you that this quarter, I mean, this is the third month of the quarter, already we have done about 7 crores of deal. Alhamdulillah, so we have been able to expand quite fast there. Now these are some of the deals I have done, some of the deals which Rehbar has done. And I'll just give you example of what are the kind of companies we look at and what are the things we see before selecting a deal, how we structure the particular deal. Trojan Plywood and Go Sports are very similar deals in terms of the structure. It's basically Mudaraba, actually Musharaka, which we have done because even they are investing. So it's Musharaka structure which we have used here. I'll first talk about Trojan Plywood. Now this is a company which is owned by Mac Group, which is a very respectable group in Mangalore. It has been in business since 1982. Very solid promoters. They've been in this business for a very long time, very trustworthy. So as I spoke to you about the promoter background, so here we are talking about a promoter family which has been in this business for a very long time. They understand this business. They have a very strong track record of generating good business. They have been through hard times, so they know exactly how to, and they've sort of been able to perform. So that's why we were able to get good confidence in the promoters. Then we looked at the business. This is a plywood manufacturing business where they sort of manufacturing it in Mangalore and they sell in the name of Trojan Plywood brand. So this is a branded manufacturing business in plywood. And based on our industry analysis, we felt comfortable with this sort of industry. We felt that yes, there is a good chance for this sort of industry to survive and do well. Had it been just manufacturing, perhaps this deal would have been rejected, because our experience with manufacturing has been that one, the margins tend to be really small. The margins, the profit margins which people make in manufacturing tend to be really small. And it is highly dependent, the risk is too high. Your dependence on the clients and your dependence on the suppliers is very high. So typically the risk tends to be very high in those. In this particular case, however, it is a branded manufacturing, and hence we felt that the industry is a stable industry and it is a safe industry in terms of risk, lower risk industry for us to work with. The structuring which we did was, so this was a company which had its manufacturing facility in Mangalore, and it would manufacture, and then the marketing arms of the company, which would be spread throughout South India, would sell it to the end clients. Now we felt that we will invest only in the marketing arm of the company. We did not want to invest in the manufacturing arm of the company. So what we did is we created a separate company, limited liability partnership, where we got investors. We got an investment of 5 crore, and I'll tell you why we chose 5 crore, whereas we could have chosen a higher number. We got an investment of 5 crore in this company, and this capital was used to buy the manufactured products from the manufacturing company and sell. Now typically the monthly sales of this company is about 4 crore, and the credit period is about 2 months. So typically they'll need about 8 crores of working capital. Now we did investment of only 5 crore because we wanted to make sure that they have some skin in the game. The promoters need to have some skin in the game, so that they have enough incentive to work for the particular business. So we did an investment of 5 crore for them, and it's been about 6 to 7 months now. They have been able to give an average return of investment of 18%. The expected return on investment in this particular case is 22%. Why is the actual return lower than the expected return? Because the industry has not been very favorable for them, especially the problems which the real estate industry has been facing has had some effect on the plywood company. That's the reason why the return on investment is slightly lower. So that was about Trojan Plywood. Go Sports was a similar deal. This particular company is in the business of sports infrastructure, EPC. Basically, they procure sports materials, sports infrastructure materials from Germany and other European countries and install these squash courts and tennis courts in some of the stadiums and for international games. So again, as we did in case of Trojan, what we did in this case is, there were two aspects of this business. One, you're procuring the materials, the flooring materials and other things from these European countries. And two, there is that EPC, the installation and assembly work which you're doing. So what we said is we will look only at this procurement business where you're sort of importing the materials and selling it to the end clients and separate it from the EPC, the assembly and installation work. So so we just invested in this particular company. We created a new company. We got an investment of 2 crores in this new company. And this company, the only job of this company is to buy these materials from Europe and sell it to the end clients. So we would not be involved in the installation and assembly work. So this is how the structuring was done for this. The expected return on investment on this was 30%. And it's been about 6-7 months now. They have been able to give about 28 to 29% average return on investment. Now, you might be thinking, why is Trojan giving only 21%? I mean, actually giving only 18%, and why is this giving 28%? Isn't it obvious every investor would then invest in this deal? I'll come to that point in some time. The third deal, which I want to highlight, is ID Foods. Now, ID Foods is in the business of manufacturing and selling branded idli dosa batter. The chapatis, you get it in those packets, idli dosa batters from the supermarkets. They manufacture and they sell it. So they needed chillers and vans for transportation, chillers so that they can install in the supermarkets. Their theory is that if the supermarkets where they sell their products have chillers from their side, it helps them boost the sales. So they wanted chillers and vehicles. So what we did is we created a company where we got again investment from the investors. We bought chillers and these vehicles which the company needed and leased it out to them. So this particular structure was Ijara, which is Islamic leasing. We lease these chillers and vehicles to the company, and in return every month they pay a certain lease. The structure is slightly more complicated than that. I will not go into the details, but overall that's basically what it was. The ID Foods was leasing, whereas Trojan and Go Sports were Musharaka structures. Now, in case of ID Foods, you'll see the expected return on investment is only 21%. Now, the point aside, in some cases, you see that the return is low, and in some cases, you'll see that the return is high. The idea here is that the basic rule of finance is high risk, high return. So the deals where we feel that the risk is very high. Why is the risk high in Go Sports? Because typically this industry is a very cyclical industry. Real estate is a very cyclical industry, and any small changes, any small fluctuations that happens in this industry will affect the profits a lot. So that is what we mean by high risk. Whereas Trojan and ID, for example, as I mentioned, the expected return in Trojan was 21%. Even though real estate industry was hit in a very big way, the return only came down to 18%. So this is what we mean by low risk. Low risk is where the fluctuations in the profits are expected to be low. Whereas high risk is where, for example, when you're one side you're talking about 30% return on investment, if things go bad, it could even be a loss of 50%. So that's what we mean about with high risk. So investors are supposed to choose the particular investment based on their risk-return profile. For example, if this is the person who actually came and said, look, I have 3 lakhs, this is my life savings, I want to invest in Go Sports. I would tell him, no, please do not invest in that. If this is your life savings, you better invest in a deal which is a low risk and low return. I would probably suggest him that he invest in the ID Foods or Trojan Plywood deal. So that's the risk-return profile which we have. Apart from those deals, as Abdul Rahim Saab had said, that we also need to look at the really small businesses who need investments and sort of really support them. So we have a concept of social deals. In fact, out of the 55 deals which we have done, I think almost about 35 deals, 30 to 35 deals will be social deals which we have done. Social deals are deals where the idea of investment is not just to get return on your investment, but it is also to support a deserving promoter. So for example, if someone says, look, I have this money and I want to invest and I just care about my returns, I'll say, do not even think of social deals. Because these are the deals where the risk-return profile is not sort of right. The risk is high, whereas the return is not high enough to compensate you for the risk. So typically the investors will say, look, I have, for instance, for example, if an investor says, I have 1 crore to invest. So I tell him, look, you invest 95 lakhs in the normal investment deals and 5 lakhs you invest in these social deals where you are able to support deserving entrepreneurs. And inshallah, there is a good chance that you'll be able to get decent return, but there is a high risk of default. There's a high risk of loss also in these deals. So these are a couple of examples of the social deals we have done. This is a tomato shop guy in DJ Hilly. DJ Hilly is almost one of the most backward places in Bangalore. So both these businesses are in that area. So he had a tomato shop and he needed some capital for growing his business. So he invested about 3 lakhs or something in this business. And I think he's been giving a decent return, about 19-20% return to the investor. There was this other guy, Sherali. He wanted to start a carpenter workshop. Again, we did about 3 lakhs of investment with him, and he has been giving about 12 to 13% return on investment. So this is the other kind of deals which we do. Some of the deals which we have in the pipeline. There is one very interesting deal, Manu Memorial Hospital. This is a 20-year-old hospital in Malappuram district of Kerala, and they're looking for about 4 crore of investment to purchase. Okay, 4 crore of investment. Now, I think especially for the businesses, this will sort of give you a clue as to how we really look at businesses. Originally, Manu Hospital approached actually AICL. I mean, we're sort of working with AICL together on this deal. Had approached them with a proposal that they need funds because they want to expand. There is a land which is just adjacent to their hospital. They want to expand. They want to buy the land, build the infrastructure, and have more units in the hospital. So we went there, we studied the whole deal, and what we realized is the current business is a very profitable business. It's a very strong model. It has a very strong, unique, sustainable, competitive advantage with them. And that is something which very few businesses have, a unique, sustainable competitive advantage. Sustainable will be, for example, you say that I'll sell this particular thing at such a low cost. That is a competitive advantage. But the question is, can you sustain that for the next 10 years? If you're able to sustain that, then it is a sustainable competitive advantage. So in that particular case, they are able to provide services at a much lower cost compared to the market because of certain reasons. One, because the infrastructure which they have created has been a very low cost infrastructure. And two, because this has been in business for more than 20 years, and so there's a very strong loyalty which they have from the customers. So even though they do not provide the best of services, I mean, in terms of the show, the ambience of it may not be the best, yet they are able to attract a lot of patients and provide services to them at low cost. So that we felt was a very good sustainable competitive advantage. However, what we told them is, look, at this point of time, they had debt of about 1.6 crore on their balance sheets. They're doing very well. Now, there are two things which you're looking at in your business. One is consolidation of your finances right now. You already have a debt of 1.6 crore and you want to grow your hospital. So what we advise them is, look, as of now, let's get rid of the debt. Okay, let's get rid of the debt. Make your cash flow situation really strong. Then we'll talk about growing. So the deal which we suggested to them, and they are still yet to come back to confirm, most likely in a couple of days, is for 1.5 years, we will give you 4 crores, out of which 2.5 crore will be used to purchase the land, which is next to the hospital. Now, unfortunately, that is something that cannot be delayed because the landlord is very keen to sell the land to someone else, and unless they buy it, I mean, they'll just lose it. So we have to include the land purchase. Buy the land, and with the remaining 1.5 crore, pay out the debt, but do not construct and do not expand for the next 1.5 years. Make sure that in this 1.5 year, you are able to pay 1.5 crore of your invested amount back. And looking at the cash flow situation, they will be able to generate profits and additional savings of 1.5 crore with which they'll be able to pay back this 1.5 crore. Then after 1.5 years, when you're strong enough, then you look at expansion. The way we will expand at that point is, typically in Kerala, I'm not sure how things work here, but in Malappuram especially, there'll be a lot of investors who are very willing to invest in the land and keep getting rents on that. So what we suggest to them is 1.5 years, you keep paying the profits and repay 1.5 crore of the 4 crore investment amount. At the end of 1.5 year, then you look at expansion. Perhaps two options. One, we are able to roll it over or get new investors for you. Or the second option is, if you really want to, I mean, if you're not able to roll over because of some reasons, for example, if the investors' experience in this 1.5 year was not very great, in which case they would not want to roll over, the exit option for you would be to sell the land to these interested investors, who will then invest and you keep paying the rent to them. And at that point of time, with your own savings, you'll be able to do the construction and go for expansion. So that is one deal which is available. And so as Abdul Rahim Sahab was saying, I mean, you need to look at consolidation of the businesses and also the expansion, but there has to be a fine line, what you can do at what point of time. So this is what we had suggested, and this is one deal which is, inshallah, and I think this is going to be a very good deal, 20% return on investment, a very safe deal, very strong business, has been, I mean, a very strong track record, a very respectable family, inshallah. The second deal, ID Fresh, I had spoken about this company some time back. We had done a leasing deal for them. Now they are also looking to get some more funds to fund their manufacturing facility. They're looking for about 100 crores of investment. Of course, not all of it is going to be done by Rahiba. A part of it, perhaps 20 to 50 crore of that funding will be done by Rahiba. So here we are talking about funding the manufacturing arm of the ID Foods. So just like in the case of Trojan, we did the opposite. We funded the marketing arm of the company. In this particular case, we'll be funding the manufacturing arm of the company, inshallah. And so that deal most likely will happen soon. And in this particular case, since this will be seen as a very, very safe deal, the company is very well established. The turnover is more than 100 crores. They already had private equity investment of 10 crores, and they're very soon going to raise another 50, 60 crore. Very strong business, very strong bookkeeping. So will be seen as a very good deal. And hence the return on investment in this case will be perhaps on the lines of 16 to 18%. Inshallah. What our investors has to say, these are some of the feedback which some of our investors have shared. I'll just probably highlight one of them. Tazeen Omar, she said that I'm very impressed with the RRC model and look forward to investing in many more deals in the coming months. All of these testimonials we have highlighted on the website. You can have a look at it, inshallah. What our promoters have to say, especially this particular one is very close to my heart. Sanjay, he is a non-Muslim promoter. And we did funding for his business, which is a stationery shop. And I asked him this question, why did you take funding from us? I mean, for you, it doesn't really matter. You can go ahead and take money on interest. So why did you really take money from us? And he said, so this thing, very interesting, he said, I've approached Rahiba for funding as I've realized over the years that there's no barakat in interest. And this is, he exactly used the word barakat. He said, if I take money from you, I know I'll be able to sleep well. But if I take money from those interest guys, I know I won't be able to sleep well. And I have learned this through experience, that if I take money without interest, there is more barakat in it. Alhamdulillah, that was one of the feedbacks which was shared by a non-Muslim promoter. Okay. I mean, a lot of investors ask us, how has the performance of your deals been so far? Now, unlike other cases, funds, I mean, and other structures, it is not possible for us to give a number to it. So what we did is, in order to be able to give a number to the investors, we created an index. We call it the Rahiba Business Performance Index. There are certain rules based on which this index works, but I'll not go into that. I'll just tell you, based on this, Rahiba's performance has been like this. The green line which you see on the top, mashallah, this is Rahiba's performance. And we have compared it with some of the other known securities in the market. The one in orange is Sensex performance. As you can see that the performance has been negative in the recent months. Gold has been slightly positive. Gold is the gray line, slightly positive. And the yellow line, straight line, is the Kotak Mahindra 1-year fixed deposit. So this is where it would have been. So basically, based on this, Alhamdulillah, Rahiba's performance has outperformed, significantly outperformed, Alhamdulillah, all the other investment structures. But I'll say that, okay, typically in a structure like Rahiba, initial performance cannot be used to say that this is better than everybody else. Because typically in structures like this, it is over the longer period of time that you tend to see some problems than in the initial. Initially, you definitely always get good returns. It is only, say, 1 or 2 years after the investment when there might be some challenges in the businesses. So this is not really an indicator that we are better than everybody else, but it does indicate. For example, if the same graph would continue after another couple of years, I'll say, yes, we have performed really well. So until now, the average return on investment which we have been able to generate for the investor is about 24.3%, which I think is quite healthy, alhamdulillah. That's about it. For any more information, please feel free to log into our website. You'll find all the details about all the deals we have done so far. And of course, our brother Ismail Said is here. Please feel free to contact him for anything you want. Jazakallah khair. Assalamu alaikum.
Alhamdulillah. In fact, before we go to the panel, what Brother Sharif and Brother Mudassir had summarized to us as they have only two news, the very good news and the good news. There is no good and bad news in Islam. There is a very good news which is for the investors with all the due diligence and everything happening, alhamdulillah. And there's always good news to the business. I ask for 10 lakhs, but if somebody says take 5 lakhs, I'm not going to say yes. I'm going to say I know how to use 10 lakhs, so I think I deserve 10 lakhs. But what Rehabar is saying, 5 lakhs is good for you. So that's the message. Because that is over the experience what we see around us. Like what our Professor Doctor said, mentioned the hadith where no amount of money will satisfy any individual. So we land up in trouble just because either we rate ourselves very high, we overborrow or get too much of fund. So alhamdulillah, that's in a nutshell what I want to summarize, whatever our brothers have just explained. This is a very unique and alhamdulillah the right model as of now. So I have to thank, before we go to the panel discussion, Brother Sharif and his entire team for conceptualizing something like Rehabar. This is the first time a bold effort has been taken to really build the cat, because otherwise who's going to do this? Though we have the interest and intention, when it comes to money, half of us want to stay away. Who's going to take the risk of identifying the business, talking to the investors and getting the money? And this is not an easy job. It is the most difficult job when it comes to amana. So jazakallah khair. We all have to pray again. The best thing what we can do is pray for all of these brothers and for this concept. Jazakallah khair. Now I request our panel members to come to the dais, so we'll have the Q&A session. Before that, we will have Abdul Rakib Saab giving his comments, and then we will start the Q&A session. Brother Sharif, Brother Mudassir Beg, Abdul Rahim Saab, Abdul Rakib Saab on the stage, please. Professor Shaulamid had to get excused because he had to catch the train at 1:30 to reach Trichy for his flight to Malaysia. So he wanted me to give his salams to all of you. So we are now starting with Abdul Rakib Saab. We know him better. For those who have just come, he is the General Secretary of Indian Center for Islamic Finance, and alhamdulillah, they have chapters all over. So he is the man behind whatever activity is happening on the regulatory side. Sharik Saab, sorry, I forgot. You have to come to the stage. I forgot you, sorry. Sharik Nisar. On the political side, as well as in the context of RBI. So Brother Abdul Rakib Saab is spending a lot of time, alhamdulillah. So I ask him to share his views on whatever is happening, and then we'll go to the Q&A session, inshallah.
Bismillahirrahmanirrahim. Thank you, Brother Ismail Said Saab, and also Mr. Sharif and Mr. Mudassir Saab for giving a very excellent presentation. And it is an eye-opener for all of us that such things is there in our community, and then I hope that it will get its foothold in Tamil Nadu also. Tamil Nadu has got great business background, and I'm sure, inshallah, under the leadership of Ismail Said Saab and under your guidance of Sharif Saab, Mudassir Saab, and Abdul Rahim Saab, and Sharik Saab, it will be a great success in the years to come. I just want to speak about three theoretical things before you people. One thing is, in our community, we lack what is called the financial literacy. What is the importance of mal? What is the importance of wealth? That is not being understood. As somebody was telling about the Bangalore and all, how people are spending their money. I was just reading a small article by Mr. Nishar Motiwala, somebody has written in Milli Gazette, and he was comparing the Islamic Muslim Mohalla and Gujarati Mohalla and how different it was. So the importance of mal is very, very important because Allah has said that amwalukum allati ja'alallahu lakum qiyamah. The life of anybody stands on mal, and so and how to save money and how to invest it. That should be a part of a Muslim's life. Today, what is happening in our conventional life and conventional finance, we spend and then we pay later. Credit card system. An Islamic system is totally different, saving and investing. And so that is one thing. The other thing is, very important thing that we miss in our Muslim life is the collection and corporatization of the zakat system. We talk about the 5 pillars of Islam, kalima and prayers, hajj and the Saum, but very little knowledge is there about the zakat. And I request you that you go back and then study more on the zakat. And I have got a small knowledge. I have been doing some study on that. For 700 years in the Muslim, after the Prophet ﷺ, the zakat was institutionalized. And when the Baghdad was invaded by the Tatars, the collective system was given up, and individuals were asked to give the zakat. And how zakat is being used in countries like Malaysia and South Africa has to be studied. Time is not there is no time for me to expand all these things. And another one important thing is the business. We Muslims have given up the business because Nabi Sallallahu Alaihi Wasallam has said, Tisatu asharu rizq min at-tijara. 9 out of the 10 parts of the risk is from the tijara. We have to indulge in our business, whether it is small or the big. Please see to it that we engage in the business. These are the 3 things. And I just want to, because it is a very select gathering and those who are interested in finance and business are here, I just request you to go into the chapter of the market of Medina. The Prophet has instituted, soon after constructing the Masjid al-Nabawi, he made a market of Medina, what is called Suqul Medina. And he said, there is a lot of literature available if you go into the website and the Google search, market of Medina. And only one hadith I want to tell you. He said, Al-jalibu ila suqina kal mujahid fi sabilillah. Those who come and then buy and sell in my market is just like the mujahid fi sabilillah. In that market, it was a very great supermarket. He done away with the exploitation of the Jews and standardized a very, very significant international market in the Medina. This is not there in the regular Sira books of our literature. So please go into it and then say, in that one, I just want to mention our ladies, the sisters in here, that in that market of Medina, there was a place for the ladies also. Lady traders were there. And the chief, the chief of the inspectors were, some of them were ladies also. And that lady, Shafa bin Abdullah, it was told, she was the inspectress of the market till the Khalifa Hazrat Umar. So these 3 things I want to emphasize. Financial literacy, then the collective system of the zakat and how to utilize it, and the third one is concentrating on the business and trade. And now coming back to what is happening in India, Brother Shariq Nisar was my great inspiration and the guide in almost all the work that I'm doing. He mentioned about insurance. For example, we in India, I just want to tell all my friends here that we are living in a democratic country, in a plural society, and we should know how to work with the system also. For example, when the insurance bill was put before the select committee of the parliament, and then we thought that we have to go and then submit before them the takaful, as Shariq Nisar was telling, Dr. Shariq. Then I asked Shariq Saab, can't we make a presentation before the parliamentary committee, standing committee on the parliament? He and one of his friends who was very well versed in the conventional insurance, Mr. Wahab Masood, we joined together and make a presentation. We went there. That is another story how we went into, out of the 800 people, we got about 10 people were selected. And then I just want to tell you, when we presented, Dr. Sharif presented, one of the select committee members, he's from Bangalore, Mr. Raju Chandrasekhar. He said, I did research on Takaful. His words were innovative and inspiring. Take it from me. He's a very, and then he said, I have got a research team. Can you go there and then talk about to them about the Takaful? Then one thing. Then about SBI Sharia Mutual Fund. One day before, it was deferred. Then I talked to MD of the SBI, and then he said something has happened in the social media. Then we met again. Sharif was there with me.